this evening. Now, ladies and gentlemen, I want to thank you for joining us for tonight's Power Pack Tuesday. This is a Power Pack Tuesday, and like I said, I just want to thank you for joining us this evening. So as we get started this evening, what we've been covering, because we want to put you in a position to where you're winning. We want to put you in a position. The BYOB is framed, and the BYOB movement talks about the challenge you accept. You accept the challenge to learn how to be your own bank. And what that challenge is and what that challenge means is that when you enroll, you're going to learn how to utilize the tools. You're going to learn the foreign exchange market, which is going to put you in a position of profit. That's exactly what we're here for. That's exactly what this is designed to do. So what we've been discussing and what we've been talking about is the Japanese candles. This is the foundation of any pattern. This is the foundation of anything that you're trading. So this is the movement of the market. With the time frames, anytime you look at a chart, you're going to see red and green candles. This is the premise of what you're going to see. And so I'm just going to recap. We definitely are going to discuss this. And so what you're going to see, with the green candle, it is a bull candle. And this typically states that when the market opened during this time frame, it opened here and it closed here. That's what that means. That's what this is. The market opened lower and closed higher, which means it's in an up position, a buy position, which means that that's what's happening in this. Now we have these wicks. What these wicks mean, the wicks simply mean that we have a shadow, meaning that the market spiked at high or it spiked at low. That's what those wicks mean. So, but that's not where it closed. The body of the candle is where it closed. Now, also with a sale, we actually have the opportunity to be able to profit, and we are able to make money during a buy and a sell. So the market, it opens and it closes. It opens higher and it closes lower. So what happens is on each chart, 1 minute, 5 minute, 15, 30, the 4 hour, 1 hour and the 4 hour charts, daily, week, month. Each candle represents that time frame. That's what each candle represents, okay? Now, what we see when we see the candles. What do you see when you see the candles? The candles tell a story. The candles dictate what's happening. The candles let you know what the movement is and what is going to happen in the market. So if we see a small red candle followed by a large green candle, that's a engulfing pattern. That's a bullish engulfing pattern. So this means that the market is turning. So we were in a sell and now it's turning to a buy, okay? If we have a small green candle followed by a larger red candle, if you notice, this candle is larger. The green candle can literally shift and fit inside of that red candle. That means that it's rejecting it. It was in a bullish, it was in an uptrend, and now it's turning around and it's going in a downtrend. They rejected it. The bears, the sellers, they said, no, we are going to sell the market. We're taking control. So that's just how you have to see it and how you look at it. That candle literally fits inside of this red candle. So that's what an engulfing pattern means. It's the exact same thing when you saw this candle. That red candle fit inside the green, and this one, the green fit inside of the red. You're going to have your dojis. You'll hear a lot of times, yes, it's dragonfly, gravestone, but a lot of times you'll just hear the terminology doji, okay? So when you hear a doji, so with this doji, the dragonfly doji, that means that the open and close are at the same price. There is no body of the candle. However, it has a long lower tail. So the resistance of the buyers, they had an attempt, the buyers were resisted. There was an attempt to push the market up, but the sellers resisted that. It did not happen. And then we have the gravestone doji. The gravestone doji, it has a long upper tail. So what happened is in their attempt to buy the market, the sellers, it pushed it down. So the open and close is exactly the same. Exactly the same. Now we have our morning star. So when you see the morning star, this is a reversal pattern as well. The key with this one is you see it's 3 candles, but between these 2 candles, there's a gap. And then there's no gap between the second and third candle. The color of this candle does not matter, but you have your red candle, which is a sell and which is bearish. And then you have a gap between the candles. You're going to have a shooting star, but when you look at it, it's what's called, when you hear the hammer, you hear me call it a pin bar a lot. You'll hear that a lot because the hammer is the one with it on the top, the shooting star is the one with it on the bottom, and then the hangman is the exact same thing. It looks just like a hammer, which I will show you those pictures in just a moment. And then you have a green candle, which pushes toward the top, which goes into a buy position. So this is a reversal pattern. So which means that when you see this, you go from selling to buying. Now, the evening star. The evening star means that I have a bullish candle. Same thing, I got a gap. Now I have another small candle, and then I turn down and I'm going into a sell. Now, hammer, this is what I was just referring to. A hammer. A hammer is a reversal at the bottom of a downtrend. So this is a reversal. So when you see a hammer, that means that the market was in a downtrend and you see the hammer is at the bottom, but it started getting pushed up in an uptrend. So this momentum and this movement, that means that the buyers are pushing the market up. So that is why the hammer is at the bottom of a downtrend. And you often hear it called a pin bar as well. And it does not matter what color it is. That it does not matter. Then the shooting star. The shooting star is at the top of an uptrend. So what happens is the market's moving up, and then the sellers come in and they push down. So the sellers begin to take control and they reject the movement up. So the sellers reject this movement. And so now we're pushing down. So as you can see, it does not matter what color it is, because the only difference is within the color is that candle just happened to close before they were able to take complete control. So we open and close, or we open and close. So the color does not matter. You're looking at the fact that it has this long shadow, the long wick on it. Our tweezer tops. What the tweezer tops are, okay? What my tweezer tops are and what they show me are reversal patterns. This means that the market is this means that the market, when I have it's a reversal pattern. So when I have the green candle, my mouse got stuck, sorry. When I have the green candle and then I have the red candle, it is a strong sell. It's the rejection of the higher prices. But when I have a red and a green, It's a strong buy. It's going in a bullish position. So this way, it's rejecting the lower. So I'm pushing up. This means I'm pushing up. So this is a bullish candle and this is a bearish candle, but it's being pushed. It's being pushed. So, and this one is being pushed. It's being pushed. So I'm reversing. Now, my Harami pattern. So it looks very similar. It looks almost the same as the engulfing, but it's flip-flop. This is a Japanese name for pregnant. So when you think about these candles, you can think about it being a pregnant candle, but it's a reversal pattern as well. So what you'll see is you'll see a larger candle, and then you'll see the smaller candle being, the smaller candle is the second candle instead of like the engulfing, but it's also a reversal pattern. So this is a Harami pattern as well. Now, when you look at this, this is what that looks like. So I have my Harami pattern. Now I'm gonna talk about when you utilize these, but as you can see, I have my red candle, then I have my green candle, which is my buy. So I have my sell, then I have my buy, and it was at the bottom of my downtrend. But what happened is it reversed that pattern. It reversed it. So this is a reversal pattern. What's also important is my 3 black crows. My 3 black crows. These 3 black crows, when you see this, I had an uptrend, a strong uptrend. Then when I see 3 strong candles back to back, these are called 3 black crows. But immediately following that candle, you're going to see another buy candle, a green candle, where the buyers attempt to get back in control, but the sellers are so strong because this was a strong uptrend. The sellers are strong. Do not let this fool you. Do not jump out of a trade. Don't jump out of the market, because it's going to stay in a downtrend. They're going to attempt to get back in the game, but it does not happen. When you see this up, it's going to be like a slight uptrend, and it goes back and it remains going in the downtrend. Then I have my 3 white soldiers. My 3 white soldiers do the same thing in the opposite direction. So I've had a strong downtrend. I have a strong downtrend. Then I have 3 strong candles. I got 3 strong candles. But then, remember, it was a strong downtrend. So because it was a strong downtrend, the sellers are not just going to give up that easy. So that's why we get this. That's why we get this after the 3 strong candles. And every time it works, every time. But guess what? Because the buyers came in so forcefully, they came in so strong, they remain in control, and we stay going in an uptrend. And that's the exact same thing here. The sellers came in strong. The buyers came in strong. So stay in your trade. When you see that, you know what's happening. You know what's going on. Then we have the dark cloud cover. So you see it's a longer wick. You got a shorter wick. But the reality of what you're looking for is because sometimes this is actually higher. The red candle, the sell candle, sometimes it's a little higher. But when it's flat, what you're looking for is this is 50%. You don't want it to stop up here. You want this to be at least 50%. So what happens is it's going to form a cloud over this green candle, the buy. When it forms this cloud, that's why it's called a dark cloud cover. When it forms that, that means it's going to take it over. That means that that cloud is saying, no, it's my turn. I got it. We're taking this over. But it has to be at least 50% of that other candle. And then we know we have a reversal. We know that they've taken over. And see, this is what I meant about sometimes it's higher. It's not always parallel. Sometimes it's higher. but it's still 50%. It's still going to be 50%. That's what it's going to be. This is an example of the dark cloud cover. This is what that looks like. So I was in an uptrend. The dark cloud cover took over. You see it's 50% of the candle. And we turn around and we started going in a dark position because it took over. It got to 50%. In the opposite direction, it's called a piercing pattern, but it took 50%. It is 50% of the candle before it. And now we're in a nice uptrend. Now remember this. This is very important. That trend. The trend that we're looking at, what trend are we in? Are we in an uptrend? Are we in a downtrend? So when we're trading, this is very important. What is our trend? And then we want to know our area of value. So I want to know my support and resistance lines. I want to know how that works. What are my support and resistance lines? I can use that. I can use my moving average, or I can use a trend line. So those are three very important tools that you utilize that help you with your area of value, that help you be able to analyze the market so you can have effective trades. It's all about the skill set. You focus on that skill set, you focus on learning that skill set, and the money is going to come. And then that is when we use these entry triggers. So that's when we use these triggers. So now I'm going to share something with you. I'm going to show you how this can effectively, you can effectively utilize this with the tools. Let me share this with you. Now, this is our web analyzer. Take a look at this. The voice you heard when you logged on, this is our coach, this is our mentor, Mr. Gerald D. Rogers. This is how significant the BYOB movement is. We're talking about educating 1 million families financially by the 28th of March, 2021. That's how significant this is. This is how impactful, and this is how impactful BYOB is. Anyone in the company that logs onto this site is going to hear from our coach, our mentor. They're going to hear from BYOB. They're going to hear Be Your Own Bank. But then we talk about when you enroll, you learn the tools based on your personality. Based on your personality plays a big part in how you trade. We all see the market the same way. We all see the exact same market. We all see that. However, what we see and how we analyze it is always going to be what fits our personality. So now, when I log into the web analyzer, which is a great tool, it's a great tool, okay? Now, you can make money all day on the web analyzer. It's broken down into different tiers. Trade ideas. What is it that you want? What is it that you need? So these trade ideas. I have free trade ideas. So when you click this, I'm not going to click it now because it's going to take me off, but I'm going to show you in the web analyzer. But I got free trade ideas. So I'm thinking about a trade at this currency pair and this entry point, or the London payout. You subscribe to the London payout, guess what? You're going to get pushed trades. That's what's going to happen. They're going to send you trade alerts and trade ideas. And that's literally no analysis needed, because you have individuals behind their scenes that are actually doing that for you, doing the analysis for you. So as you're learning, as you're beginning to learn how to trade, this is something that you can definitely take advantage of. And then tier 2, little to no analysis. So yes, it's analysis, but it's not much. So using what we just used and what we just learned, it can help you perfect this. So we're talking about the original power trade, which I'll show you. You want to touch on crypto. People love to trade crypto as well. We have Forex and crypto. And then you have the thrower power trade, triple fire power trade. All these are power trades. That means that they're ready to go when they call it, because this tool scans the market. This tool does all of the work for you. So you're not sitting there fumbling through currency pairs. You're not sitting there trying to figure out which currency pair I should be on. You're not having to do all of that. What happens is this scans the market for you. It does all of that for you. And then it's going to, when it analyzes and sees what's in the market, it's going to send you an alert. You're going to get an alert. Then you pick what you want to utilize, the tier you want to be on, to be able to analyze that trade. Simple scalper money flow. And then you have the volume burst. So what are the volume bursts? It means a little bit more analysis. And you actually get to go through and pick the strategies. Look at all the different strategies that's in there. Don't look at it and say, oh my goodness, that's a lot of strategies. Which one would I pick? Look at it and realize that, oh my goodness, when you look to your left and you look to your right, when you look forward and backwards, the reality is we're all different. The reality is nobody sees anything the same. No matter how great something is for one person, no matter how great you like something, we're all going to look at the exact same market. We can look at the same TV program and get something different out of it. So what happens is, what this gives us is so many different options for us to look at the exact same thing and come out a winner and come out in profit. That's what this does. The education, recorded and live. So you want to know how to utilize these trades? You want to know how I can do it? Guess what? Tap into the educators. Tap right into them. So that's what this tool does. That's what this is all about. So now I'm going to go to the app. You hear that? Cha-ching, I'm in the money. Whenever it cha-chings, that means a trade is getting called. So do I want to trade on the 5 minute? Do I want to trade on the 15 minute? Do I want to trade on the hour, the 4 hour, or the daily? You get to make that choice. You make that analysis. So daily means I set it, I analyze it real quick, set it, and I walk away from it because it's happening daily. It happens daily, right? It's something that is going to happen. I don't have to sit there and do it. Then on the 5 minute chart means I'm some serious scalping. Most of the trades that I take, my personality, I start at 15 minutes. So I meant to pause and ask, do we have any questions or comments? Because I want to walk you through what you just saw. So I know I went back over the candles, the Japanese candles. I'm going to tie all that in together for you. But the Japanese candles, I introduced you to the beginning of the web analyzer. So I do want to make, if you have any questions or comments before we walk through this. No questions, no comments. Okay, so now, when you, news alerts, high impact news alerts. So if we got high impact news alerts, we're often told when you're trading, what's happening in the news. Guess what? They're going to give you these high impact news alerts. That's right here. So it'll have something there when it's something we need to know. Trade ideas. Remember we just showed you trade ideas. So I'm thinking about a sale on USD CAD around, and that's the entry point. That's the pip. So that would always be, that number is always was along this sideline, or along the right side, the pips. That's the price, the call price is the pip. So, and then they give you the potential profit point, the risk, take profit 1, take profit 2. It give you your stop loss on the trade ideas. So you can go into the web analyzer and just take some of these trade ideas, and these are the ones with no analysis. So you can just go in and practice, right? And guess what? It's a close button right down here at the bottom, close. I'm gonna close it out. Now, straight across the bottom, do I want to trade Forex? Okay. Do I want to be cryptocurrency? Do I want to trade cryptocurrency? I can switch it over. So now all my alerts are going to come out in cryptocurrency. What about my index alerts? See, the US 30. That's what's been being called. Now, what about metals? So I can click on one of those. Now we're talking about gold. I can trade gold against the US dollar. So whatever your heart desires, you can trade. It's all right here. Now, what about power trades? These are the power trades that we were just talking about. Little to no analysis. So we went from the trade ideas. Now, the other one that's just alert before I get into the power trades is the London payout. So the LP along these power trades is the London payout. So I'm thinking about a sell on GBP NZD. So because there's no analysis, there's no button for me to click. It's nothing for me to analyze over here. So the information just comes up. And then, so if he gave me a trade idea, then he's going to come back and give me an update. So the reality is, it's green, I'm thinking about a buy. If it's red, I'm thinking about a sell. It matches the candles. Little to no analysis. It matches the candles. Power trades. The original power trades. I click the O. Remember, how to trade these are all in that education. Of course, we're gonna analyze some and go through some over calls and different things, but I want to show you how what we just went over applies to what we're looking at. Power trades. So little to no analysis. So these are the power trades. So it's already programmed in what you need to analyze the power trade that was called. So if I click the box on the power trade I want to analyze, he's thinking about a buy, but this was 3 hours ago, almost 4 hours ago. So, and this is on an hour chart, but this was like almost 4 hours ago. So you want to just make sure, that's why it's a little analysis. So you want to make sure and look at, understand the rules and go through the education. Then we have the crypto, right? We have the crypto. So with the crypto, we have Picasso. He's giving trade alerts. He's telling you to sell the Bitcoin to the US dollar, and he's telling you where, and it's giving you the time that it was called on and the time frame. So little to no analysis. It's too many opportunities and two ways to make money. Simple scalper as well. And Thor, money flow, and triple fire. Triple fire. This one. What this one does, just to show you, he trades, and this is what I meant. I want to show you, he trades from support to resistance. This strategy uses support to resistance. So utilizing support to resistance, so just imagine, right? Did it not? Hold on. My triple fire. Okay, make sure my triple fire come up. So support to resistance. Now, what are the things that I want to click on? One that was called. So he wanted to go long, right? But he wanted to go long. So he wanted to buy, but he wanted to buy, but he trades support to resistance. So what is one of the things that's covered? One of the things that we talk about in that area of value is just that. So that's exactly one of those things that we cover. Hold on, my PowerPoint came back up on my thing. Got it. Okay. I'm back with you guys. So how do I do my support and resistance lines? Once again, which is very important, I turn mine into a line because it makes it easier for you to see. It makes it easier for you to see those areas. So when I'm looking at those peaks and those points, you don't have to. I mean, you can still see them on the candles. I mean, you can still see them, but I turn mine to a line because it's easier to see those peaks. It's easier to see them. And so I'll go to my tools. This is what it means by little to no analysis. I'll go to my tools, right? And I'm looking at, and I want to make sure I have a few touches. And we normally don't analyze this low. What I did is I just jumped up to the hour chart. And so just where you see these, now you don't want to do every single one, but you want to do the important ones. And of course, some of these are wicks and different things, but so you want to make sure that you get the important ones. And so I'm just gonna do this while we're training. Right? Just to show you, and I'm gonna turn it back to the candles that we were just looking at. Okay? And if you notice now, and I use the yellow thick lines so you can see it, but now if you notice, and I can adjust them just a little bit, but if you notice, these are within the support and resistance lines. The candles seem to bounce off of them and then they end up breaking through. Oh goodness, it went away. So, but that's fine because I'm gonna switch it over. So this, now one thing about this is it doesn't save. So as you can see, I slid it over and it came back, but guess what? It's gone. It's gone. My markup chart is gone. So we don't have the capability to save on here. So a lot of what we use is TradingView. You'll see a lot of what's used on TradingView. So I'm gonna stop this share. So as of right now, do I have any questions, comments on the web analyzer? Any questions, any comments? So, okay.
Ms. Dyer, real quickly here, Gerald D. Rogers here. If you could also too, I know when you were on a web analyzer, and this tool is just simply amazing. I mean, this is literally some of the same compatibility that the big banks of the world utilize. But if you could, I know you just quickly showed us how to take advantage of the power trades and the trade ideas, but can you speak to the significance of that for those of us who have a really cumbersome schedule, how this tool, no matter what our time schedule, it really allows us to become profitable as we are building our portfolio and putting ourselves in a position of profit. Can you speak to that, please?
Oh my goodness. Yes. So no matter what your schedule is, no matter what your time frame is, the market, first and foremost, the market is open 24 hours from Sunday night to Friday evening. So the market is open 24 hours. And then if you're trading crypto, it's the weekends as well. So that's when the market is open. So no matter what your schedule is, no matter how it is, if you want to just get in and out, you want to be at your lunch break, you want to, no matter what it is, you have the opportunity. You get alerts on your phone for different things. For the power trade alerts, you get on your phone. So the web analyzer sends alerts as well. So, but then the beauty is, like, I've been cashing out. I created one that works right along with the web analyzer as well. And we're going to talk about that again. We're going to talk about that on Thursday, and go over that strategy. But let's say I'm going to close this out. Let's say I just want to get back on. Look at the 4-hour chart. These are longer trades. So I can do my analysis based on the strategy that I want to use, all those strategies that I just showed you all, and I can set it and walk away from it. I can just set it and walk away. And that's the significance of the stop loss, the take profit, which means that when I enter the market, or I set my tool to enter the market at a certain price point, then it will take profit when it reaches a certain price point. And then I set all my parameters so I don't have to sit in front of the computer. And that's the beauty of it. So no matter what you're trading and how you're trading it, you literally can just set it and walk away from it. You want to trade in the morning, you could trade in the morning. You want to trade on your lunch break, you could trade on your lunch break. You want to trade in the evening, you can trade in the evening. So it does not matter. That's the beauty of it. Does that answer your question?
Yes.
So, okay. What I'm going to share with you all. Hold on. It's coming. Okay. So I marked one up already because it does not save on the web analyzer. So, but I wanted you to also be able to see what we're looking at and what we're using. So what I'm gonna do is I'm actually gonna go back to where I began marking this one up, right? Where did I start? I know I had some. Okay. Now, because I want to show you exactly how the tools actually play into this, right? And we use our platform and our tools use TradingView. So if you want to save your analysis, then you can just mark it up on TradingView and then go back and enter your trade. So you still get those call alerts, you still get all of that. We just cannot save it. So, and looking at what we have, if I go to my daily chart just to, oh, geez, hold on. I just got to bring it down. And I just lost it. What you want to identify is the trend of the market. You want to see where this market is going. And I'm just trying to push this back out so it's easy on your eyes. So you want to identify the trend of the market. So overall, what this market was doing, I'm gonna just tell you because I was trying to show you. But the overall picture of the market was an uptrend at the time. That was the overall trend of the market. So what I also have highlighted on here, so your support and resistance lines are already drawn. I've already done what we just did. So if I go in and I change the candles to the line, you can actually see where you hit those support and resistance lines throughout. But You also see that some of them are wicks, and it's an art, it's not a science. So, you know, of course there'll be some adjustments here and there that you'll make. So it won't be like picture perfect all the time, but you do enough so you can see exactly what's happening, because you want to understand those support and those resistance lines. So if I do that, then I understood the trend of the market, because that's one of the things we need to understand first. What is the market doing? So in understanding what the market is doing, then I know what's happening. So the overall picture of what the market was doing, it was in an uptrend. So now what's my area of value? So in this case, I drew a trend line. Now I'm gonna show you the candles down just in a little bit on a trend line, but I wanted to show you how you, like, one of the tools that we use. We have tools that put you in a position of profit. One of the tools is the bounce back. Remember I told you it scans the market, so we don't have to. I didn't have to go through all the currency pairs and figure out which one was in a retracement, which one had done a pullback and a retracement, because this one did. But when it got ready to push back up, because it's in an uptrend, that's how I know that I can do either take profit 1 or take profit 2, because this one of our tools is called the bounce back. So we get to use a tool called the bounce back. The bounce back, when they see this lineup and they see what we have, then guess what? They're gonna send me a call alert, a trade alert. Now I'm gonna put the back on here. And the bounce back uses the MACD. This is one of the things that it uses. But the significance behind what I'm showing you right now, the significance behind what I'm showing you is these support and resistance lines with the utilizing the strategy as you utilize that. So, and when we on the bounce back and they call a trade, they've scanned the market for us, they've done the heavy lifting, then all I had to do was go in and draw a trend line, which my trend line touches 2 points minimum, which it does. And when it breaks that trend line and crosses the MACD at the exact same time, I'm guaranteed 20 to 30 pips, guaranteed 20 to 30 pips. But how do I know that I can get, they always have a take profit 1 and it's a take profit 2, just like we saw in the web analyzer. Well, if I know the trend of the market, if I know what the market is doing, then if I know how to identify a trend, like the overall picture of this market was an uptrend. So if I already know that, then guess what? Take profit 1 would have given me 30 pips, but take profit 2 gave me 100. So if I enter this trade, that's 100 pips easy, because I understood the trend of the market. So you didn't have to scan the market. The strategy, the bounce back, IML actually provided us the information to utilize the tools, and then we understood the trend. We find our area of value. My area of value in this situation is the trend line, and based on that trend line, because that's what the bounce back strategy utilizes, is the trend line. Guess what? I now know it's take profit 1 or take profit 2. If the overall trend of the market was a downtrend, then I would know I'm trading a retracement. I'm trading a pullback. And if I was doing that, then I would have stopped at a take profit 1. That's how you know, do I do take profit 1 or take profit 2 when they give me different profits. Now, I'm going to come over just a little bit more. That was just an example of another one. But now let's talk about the market, right? Talk about the candles. Look at how they hit on the support and resistance lines. Support and resistance lines are so very important. we were just using one of the tools, one of the areas, we were just using one of the areas of value, which was a trend line. I also have highlighted on here the moving average, because that's one that you can use, but that's not the one that we're using right now. So I'm gonna turn it off. But look at, so it's not so much on the screen. I can keep it as clear for you. On this one, we're using a support and resistance line. But what do I see? Engulfing. See the candles that we just went over? I see engulfing. And this is the pin bar. If I go up to the 4-hour chart, that's why I have the 4-hour right here. This is the pin bar, because you analyze higher and bring it back down. So if I go to the 4-hour chart, why I pushed it way back over there? You see the pin bar. So that same pin bar was in there, but you're looking for it, and that's what hit that resistance point. So that same one is in there, but I just wanted to show you, when you analyze on those 2 time frames, you always want to look at 2 time frames. So you always want to kind of look at 2 time frames to see what's going on. So you had this one had the pin bar, but it also, same thing. What is this? The Harami. So both of them are telling the same story. So I'm getting the same information on the 1 hour and the 4 hour. Engulfing. So I can literally trade, just like I just showed you that power trade will call it, but so I can trade from the support to the resistance line, because as you can see, it's going to come down. It's going to go in between the support and resistance lines. Now, one thing that we also know, I mean, you see another Harami, which means that it's going to turn. So we knew it wasn't going to hit at this point. So for example, why is this important? Before I even get right here, why is this important? This is important because if I'm in a trade, right? If I'm in a trade and it begins to turn around, and I enter the trade up here and I'm expecting it to go to this support line, but I see a Harami. I know the trade, I know what happened. I know the trade turned around, but as you can see, it went into consolidation. So another thing about a Harami is when it's starting to do this, sometimes it goes, even though it's going in that uptrend, you see all these little wicks, it also means market indecision. It can also mean market indecision. So that's what this is. You got buyers and sellers fighting. They're fighting right here. But I'm still within my support and resistance still. But what happened? Remember, the buyers were in control. Look at my three black crows. What did we talk about? We came from an uptrend. The 3 black crows took control. The sellers took control. Picture perfect. You always have the buyers try to jump back in the game. They try to jump back in. Picture perfect, just like the picture that we looked at, right? 3 strong red candles. However, it doesn't work. Coming back down. And then you see they were still fighting. But guess what? When you see these 3 red candles, you have a strong sell. And so we're coming down in this downtrend. And so we got the engulfing. See how the red candle overtook the green candle? That green candle can fit inside of this red candle. So it's engulfing, and then we're going down. Now, something's going to happen soon because it's testing. It's testing. We're on the hour chart. So it's testing. It's testing. It's pushing against this support line. It's pushing against it. It tried to break it. It's trying, and then it slowly creeps up. Now, when we talk about slowly creeping up, what that does, it didn't shoot up, it slowly crept up. So because it slowly crept up, what that does is it allows the big market makers, remember, we don't affect the market. We're just trading in the market. We're doing what the banks do, i.e. be my own bank. I can be my own bank. So, but we don't move the market. That's why it's important for us to understand the market. But who moves the market? The market is moved by our banks, our financial institutions, our insurance companies. That's who the market's moved by. So when this creeps up like this, look how slow it's going. This is just taking its time. Remember, this is the hour chart. So this is a whole hour. I mean, look what it did in the hour. Almost nothing. They're fighting. They're slow buyers and sellers. Buyers tried. So it's just slowly moving up. That gave the market makers an opportunity, because they're watching the market as well, to know what's going on. So it's important for you to know that when you see movement like this, we would think that it's going to shoot up and shoot out through this this resistance line. But no, we got too much information, too much time for the market makers to know what's going on. So they tried, but the market makers went in and they put the sales in. So guess what? You know, okay, once again, tweezer bottoms, you see. And as soon as the market opened, this is today. And I think that I thank you, because I caught this trade. But as soon as the market opened today, this evening, the session, because this is a JPY, when that market opened, because what I tell you, when this creeps up, they are seeing and they're watching what's going on, right? Guess what happened? They pushed the market back down. So they came in and they took over. So they put in all these sell orders to take over. We don't move the market, but we can benefit from what's happening in the market. And that is how you become your own bank. And so it didn't break. It shot through, it almost did, but expected to test it and expected to test it again. So it's going to break one of them, because it tested it here and it tested it here. So it's going to break out of this. So our time is just about up. Do we have any questions? Do we have any comments before we transition this call?
So, Ms. Dyer, with this, when we're talking about, you made mention of the buyers and the sellers, it kind of reminds me of when we were kids and, you know, we had that play day, and the biggest event would be the fourth graders against the fifth graders, and we would have that tug of war. And you have that flag that's tied in the middle, and then depending upon the strength of who was the anchor person, that was the person that would either pull it, the string closer to your end, or then you would fall into that pit. So is that kind of like giving the picture of what the candles are doing, understanding, engulfing, bullish candle, and is that kind of what we need to take away from this conversation and kind of see it as a tug of war?
That's a really good analogy. That is a really good analogy. Yes.
So we can literally determine if we really maximize and understand the type of candles, we can really understand who's taking control of the market and who's identifying and beginning to know who's getting momentum and reversing it based on the formulation of those candles, even prior to us adding those additional indicators to be able to determine the confirmation of the market. Is that what we should take away from this conversation this evening?
Absolutely. Absolutely. You are absolutely correct. You're spot on.
Thank you. Thank you.
Anybody else? Questions, comments before we transition this call? Well, ladies and gentlemen, I promise you enroll